You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is March 14th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from Investing.com. Rising service costs lift U.S. producer prices in February. U.S. producer prices increased slightly more than expected in February, as a rise in the cost of services offset a decline in the price of goods. The Labor Department said on Wednesday its producer price index for final demand rose 0.2% last month after increasing 0.4% in January. That lifted the year-on-year increase in PPI to 2.8% in February from 2.7% in January. Economists polled by Reuters had forecast the PPI gaining 0.1% last month and increasing 0.28% from a year ago. A key gauge of underlying producer price pressures that excludes food, energy, and trade services rose 0.4% last month, matching January's gain. In the 12 months through February, the so-called core PPI increased 2.7%. That was the biggest gain since January 2014 and followed a 2.5% advance in January. Our second story is also from Investing.com. U.S. retail sales falter, underlying producer prices rise solidly. U.S. retail sales fell for a third straight month in February as households cut back on purchases of motor vehicles and other big-ticket items, pointing to a slowdown in economic growth in the first quarter. Other data on Wednesday showed underlying producer prices increasing solidly in February amid strong gains in the cost of services such as hotel accommodations, airline fees, and hospital inpatient care. Inflation is steadily rising, and the Federal Reserve is expected to raise interest rates next week. The Commerce Department said retail sales slipped 0.1% last month. January data was revised to show sales slipping 0.1% instead of falling 0.3% as previously reported. It was the first time since April 2012 that retail sales have declined for 3 straight months. Economists polled by Reuters had forecast retail sales rising 0.3% in February. Retail sales in February increased 4% from a year ago. Our third story today comes by way of Fortune.com. Bitcoin falls on bad news from Google and the IMF. On Wednesday morning, the price of Bitcoin slipped back below the 9,000 mark for the first time this week, following several pieces of potentially worrying news for the cryptocurrency community. First came a blog post from Christine Lagarde, in which the head of the International Monetary Fund urged regulators around the world to crack down on cryptocurrency's potential to be a major new vehicle for money laundering and the financing of terrorism. Lagarde raised the example of the Alphabay dark web marketplace, which was used to launder more than $1 billion before it was taken down. She also noted that the extreme volatility of crypto assets could easily create new vulnerabilities in the financial system. Then came Google's early Wednesday announcement that it will be banning ads for the cryptocurrency and initial coin offerings, or ICOs. Facebook made a similar move earlier this year, so the biggest digital ad players are shunning the cryptocurrency space. Our third story of the day is from FXStreet.com. WTI fails to sustain the bounce above the $61 mark. EIA data eyed. WTI ran into sellers once again above the 61 handle as persisting worries over rising U.S. output levels continued to cast a dark cloud on its price outlook. Moreover, the bulls remain cautious ahead of the U.S. IEA crude stockpiles data. That's due on the cards later today, as another rise in the U.S. output levels and/or a buildup in the crude inventories could trigger a fresh round of selling in the barrel of WTI. Meanwhile, the latest leg higher in the black gold was mainly driven by solid Chinese industrial production and crude oil output data. China's NBS showed that January-February domestic crude production fell 1.9% year to year to 30.37 million tons, equivalent to 3.77 million barrels per day. Also, a smaller than expected build in the U.S. crude inventories, as reported by the API late Tuesday, kept prices underpinned. U.S. crude inventories rose 1.2 million barrels in the week to March 9th. That's to 428 million barrels. Markets had predicted an increase of 2 million barrels. And our final story of the day here is from investing.com. Renewed trade war fears pummel world shares and the dollar. World shares slipped for the second straight day, and the dollar held near 1 week lows after U.S. President Donald Trump's threats to slap $60 billion in tariffs on Chinese imports reminded investors of the threat to world economic growth. Equity markets were attempting to recover after Tuesday's hefty losses, heartened by robust Chinese factory data, but struggled to overcome fears of a global trade war, as well as the prospect of political uncertainty in the United States. As long as the threat of protectionism and the trade war remains, markets will remain vigilant, Rabobank analysts told clients. The tariffs reported targeting Chinese tech, electronics, and telecoms were revealed by sources hours after Trump abruptly fired Secretary of State Rex Tillerson. Tillerson's exit follows that of economic advisor Gary Cohn, a strong free trade proponent. Since Trump took office in 2017, as many as 35 senior officials from his administration have walked out, including Tillerson, according to Citi. And that, ladies and gentlemen, is news you can use for today, March 14th, 2018, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a good day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.